What's going on YouTube? Mike here, back again with Renegade Forex. And in this video, I'm actually going to break down a losing trade that I took and kind of go over the mindset about surrounding winning trades and why I actually am becoming excited for taking a losing trade. I know it sounds crazy. Most people say, oh, I can't stand, losing trades, or they think that they have to be totally 100% accurate all the time, which is completely impossible. And I've actually gotten to a point in my trading where I'm happy to take a loss because it means I'm on track to get the next, high reward winner. And so in this video, I'm going to break down that loss that I took that you can probably see on this chart, and then also talk a little bit about the mindset surrounding what it takes to have that clarity or that excitement for the next losing trade. So let's go ahead and get started. Basically, what we've been experiencing on AUD USD for the last couple days is a pretty sharp sell-off. And I actually have another video on the channel somewhere talking about this trade that I took here, a winning trade. And just to give a quick recap of like where we're at, and to explain this loss and why it was a loser, I do need to give you a quick little rundown of price action. So let's bounce back up to the 4 hour here, and we can see this run up that wicked this old high right here. So you can see that annotated on the screen here by the wick line. What a wick means, if you're not familiar, is a failed higher high. And so at this point in time, when I saw, especially after this, we had this original wick right here, but then after seeing this, I was like, okay, definitely not going to run up to clear a new high. It's going to at least pull back down into this range, if not reverse and go substantially lower. And so, yeah, that brings us to, I guess, this sell off that I captured the other day, but then also this period of consolidation right here that I was trading in today. And so when we drop back down to the 15-minute, you can see that a little bit more clearly defined here. We have this 4 hour little pullback right here that's annotated with this line that I was looking to target, and then potentially all the way down to these swing 15-minute swing structure lows, or this 4 hour low that was back here. So that being said, that's kind of just like the rough breakdown of why I'm trading that direction. So I was favoring, and I still am, even though this was a loss, I still am favoring a short from this leg right here. However, I want to talk now about why I took a more aggressive short and kind of the reasoning behind that. Okay. So when you have very high risk to reward trades, or very low risk, high reward trades, in other words, if you're capturing a lot of reward with your strategy, then it becomes way easier to view losses as just a cost of doing business, right? I would rather get in and take a loss than watch a chart move without me. Now, obviously, there's a fine balance between overtrading and things like that. But when I have all of these confluences to take trades, and also the added benefit of high reward trades, then I'm not terrified to take a loss. I'm not worried about taking losses, because I know over the long run that my strategy offers uh, high reward trades on a regular basis. And so the average trade that I take, the average target is a 1 to 5. It does not have to be a 1 to 5. If something, for example, like this, I think was only a target of like 1 to 3, 1 to 4. If that is what's presented to me, then obviously I'll take that as well. But I try to at least have a minimum of 1 to 5 gain. And in doing that, like I've said, it offers you the clarity that, like, okay, I know that I can take a few losses, and I know I can be aggressive in the hopes of capturing something, rather than being afraid to get into something in the hopes of you taking a loss. So having that clarity and that switch is definitely something that's changed a lot of my trading and a lot of my results that I've been getting. And yeah, it's something that I think that most people need to understand, that you're never going to be even rarely 70% accurate. And if you are 70% accurate, I don't even know why you're watching YouTube videos on how to trade in the first place. And second, you basically, if you are 70% accurate, 80% accurate, when you see these ridiculous videos saying 90, 95% accurate strategies, usually those have a negative risk to reward ratio, right? So you risk 1 to gain like 0.5 or something like that, where you're over the long run, you have to maintain super high accuracy to maintain profit, and not go into drawdown. So that being said, having really high reward trades, it offers a lot of breathing room. It offers the ability to say, okay, I'm not afraid to take a loss because when I win, there's substantially bigger winners. So let's go ahead and break down this loss now and give you kind of a more, a little bit closer breakdown of this more immediate price action and why I was looking to take the trade that I did. So at this point in time, we have this sharp sell-off and then this small pullback and then this continuation right here, which broke this structure. And according to our rules, we would basically expect the market to come back up here and retrace and go lower, but it obviously did not. And it then broke this swing structure right here and continued back up a little bit higher, a few pips higher, a small run. This is not very big. I mean, it's like, let's see, like 8 pips higher above that high, had a really sharp sell-off, bounced back up. At this point in time, we did not actually break this low. At this high right here, we did not actually break this high. We had another sharp sell-off. So looking at this momentum downward and this momentum downward, I immediately am starting to favor sells, especially because before we actually had this break of structure, we had some equal lows forming. So we know there's a lot of stop losses below this old low and below this line just in general. There are traders coming in who are looking at this as resistance and looking to buy back up. And so right around the New York Open, I think this was actually literally right at the New York Open. We had this, this basically third low or the third tap of what retail traders see as resistance right here. We did have a reaction up from that and then a sharp sell-off, which broke structure, okay? So we had this swing break of structure and we now understand this is a strong high. And then this is a pretty obviously unmitigated supply zone that at some point in time we would expect the markets to retrace back up into to mitigate. Now, it doesn't have to do that immediately. It doesn't have to do that even in the next year. It can do that at any point in time, but that is our general expectation of how higher highs and higher lows and lower highs and lower lows are formed, is that after a break of structure, it will retrace into that range and then continue on, okay? So that's kind of the general framework that we're working under. And let's drop down to the 5-minute and it'll get a little bit clearer as to why I was taking this trade. So on the 5-minute, if you zoom out just a little bit, we had this low number 2, low number 3 that was forming what we see as resistance for retail traders. And at this reaction right before the New York Open, when I say reaction, I mean this reaction from quote unquote resistance or smart money's engineering liquidity. It then runs up and it mitigates this flip zone. Okay, so we have this flip zone right here. Now, I was not actually in this. I prefer not to trade flip zones just because over the long term, I find them to be a little bit less accurate than just waiting for the extremes. And so from this point down, right at the New York Open, this was like literally, let's see, right here, right? This candle would be the New York Open. So within the next 10 minutes after that, it mitigated this flip zone and then sold off to break that swing structure, okay? So at this point in time, I'm expecting that, with all this momentum, these sharp sells, sharp sell, sharp sell, I'm expecting that the market's going to run down pretty quickly. Okay. Now it is just Monday at the time of taking this trade and filming this video, but we have been seeing aggressive selling on AUD USD for quite some time. And we are in a swing, in a bearish daily swing trend. And so we do favor, all in all, we favor selling more so than buying. And so I was looking to hopefully capture some momentum from this little reaction right here. So price comes down, wicks it, pulls back, and then continues on a lower time frame. And basically what I was looking to do was capture this the mitigation of this flip zone and get into a short and take it down to this low right here. Okay, so this is what I was expecting to happen, was this low, which if we zoom back out was 4-hour little pullback right here on the 4-hour. So take out this low, come back up to mitigate this pullback, and then continue. And that's basically what I was, something to that effect is what I was anticipating to happen. And I was anticipating it to be a quick run, right? And so let's go ahead and drop down into the 1 minute now, and I'll show you the confirmations that I have on why I took this trade. You can see here, we have the continuation from that flip zone, pulls back up and taps into that flip zone right there. At the minute that it taps into that flip zone, it then sells off really sharp and it wicks this swing low, okay, on the 1 minute. So if you back up just a little bit, you can see this is a little pullback. I won't get super in depth into marking swing structure, but if you see the 1 minute right there, that is a break of the 1 minute structure, and it comes back down and wicks this swing low. So on the next time frame up, on the 5 minute, you would see this as a change of character. Okay, so a change of character, all that signifies is that the swing pullback is over, or likely over. Obviously, it's not 100% accurate, but it's likely over, and it's likely to continue now in the same direction as the change of character. So at this point in time, after this change of character, I then had this supply zone marked up. And so let me just clean this up just a little bit. I then had this 1 minute supply zone marked up. I had a pending order right here with the open at the bottom of this supply zone, and then the stop loss just above the top of this supply zone. So all in all, that was 3.8 pip stop loss, and the target, the main target, was 1 to 3.79, so almost 1 to 4. However, I do normally hold partials past that. So if it had gone in my direction, I would have taken majority off at this low and then allowed it to run and see how much more profit I could have gotten. So at this point in time, price retraced back up and opened my order right there. And then it did range around, which usually, right, if the great thing about smart money concepts is you know pretty much instantly if you're right? Like if you've ever taken a trade using smart money, it either goes in your direction or you know you're wrong, like usually within minutes. And so when we get trades that kind of range like this, when I get trades like this, I start to think, okay, I'm usually, I know from experience that if you're right, like pretty quick. And so I was kind of getting a little bit concerned. However, I did hold it. And then I saw this sharp sell-off. As soon as I saw this candle, I was like, okay, we're on. Good. I'm not gonna change anything. I'm not gonna close it. I'm not gonna do anything. I'm just gonna let my trade play out. And then obviously pretty quickly, really, price came back up and then wicked my stop loss. And I don't personally move my stop loss to break even or anything. So this was -1R. But like I've said in the beginning part of this video, I'm totally okay taking that loss. And I'm totally okay being aggressive with this trade, because if price did move in my direction as to what I'm seeing and what I'm, analyzing on the chart, then, and I'm not in that move, I would be upset. I would be frustrated at myself and kind of kicking myself in the butt. Okay. So right at this point in time, once you see that wick, you can pretty much, conclude that, well, first of all, obviously this was a loss, but then second, price is more likely going to be pulling back on the higher time frames to facilitate something like this being mitigated. Okay, so let's go ahead and clear this up. Get rid of this. And when I come back to the charts now and I look at that zone, I can see what's happening now. The 15-minute leg that's been defined right here because of this swing breaker structure, we now have a newly created range, and we can see that price is more likely now trading up. Well, first of all, above the equilibrium, which price is always trying to maintain the equilibrium of these legs. But then second, I can just see now looking at this, okay, we have another break of structure. We have pretty strong buying momentum come in. It's pretty likely that price is either at least going to come up into this area right here, if not just reverse and continue back towards this high, right? So if you found this video useful, I do have a Smart Money Concepts Trading Academy that I just released, and that is called the Renegade Forex SMC Academy. And if you're interested in trading like this, if you're interested in trading with naked charts and getting high risk to reward ratio trades, then you should definitely check out the links below this video, and hopefully we will see you inside the academy. If you like this video, be sure to subscribe, turn on notifications, and we'll see you in the next one. Thanks for watching.